Well, thanks, Tony, and thanks, Kerry, for setting up this conference. I'm not sure I'm going to be able to keep the audience as entertained as Tony has, but I will show you some interesting, good-looking geology and some good-looking core. I agree with some of Tony's recommendations on the red metal, so I'll support that stock pick. Okay, just moving through some of the disclaimers. I got involved in GBM in 2019, so over the last sort of 5 years, a bit like Tony was sort of saying, the stock went from 3 cents to sort of 19 cents and then back down to 0.9, and obviously I've been buying stock at all those prices and obviously more recently at 0.9. Why? Because I'm an accumulator and I believe in the assets. So just a bit of background on the shareholder base. We have a fairly strong shareholder base, but we've got I suppose what the market doesn't like about GBM is a convertible note facility that we've got in place about 2 years ago. Why did we do that? We did that to secure all the assets that we had and give us time to divest non-core assets that to repay that note, which we've sort of done. We've paid half the note off over the last 18 months. And we'll pay the remaining note off with the asset divestments that we've announced. Register, so we've got Collins Street and an overseas group called Wise Walker on the register, very supportive shareholders. So we've got the convertible note holder strongly on the debt side, but also strongly on the equity side. So they've been a very supportive shareholder. And as I said myself, I've been heavily investing over the last 3 years to build my stake up to 6%. So you got an MD here that believes in the asset, otherwise he wouldn't be putting his own money into the business. Market cap's very small, EV of about $17 million, EV per ounce very cheap at $8 an ounce. And obviously, the market's been very difficult in the last few years, but we're obviously starting to see the green shoots of at least the mid-tiers and the majors moving and obviously the gold price moving. So where are our assets? The primary focus of the company now is really in the Drummond Basin, just west of Mackay. We've got other non-core assets that we're still disposing of in Cloncurry, Mount Morgan and the White Dam asset. We've assembled about 1.8 million ounce resource at 1.3 grams a tonne over the last 3-4 years from a 300,000 ounce base in a very prospective district, which I'll talk about. So these are our 3 main tenement areas in the Drummond Basin. What have we done? So the last sort of 3 years, it's been really about accumulating a large tenement position in the basin, which is highly underexplored. The last sort of serious activity was in the early 2000s when Ross Mining left the district. A lot of fragmented ownership and not a lot of coherent exploration sort of happening over the last 20 or 30 years. We picked up, we had the Koala Gleneva area, Mount Coolin. We expanded that tenement package to the south. We then bought the Yandan leases off Aeris with a small resource space on them, and then we bought the Twin Hills asset in green in 2022. What have we done since then? We have farmed out the eastern package to Newmont, or Newcrest originally, and then Newmont. Why did we do that? Look, the market being soft, we couldn't do everything. In a stronger gold market, we probably would have explored all these areas ourselves, but in the weaker market, we've had to sort of leverage other people's expenditure and use some joint venture funding. Recently, we sold a 70% stake in our Twin Hills asset, which is where we've got a 1 million ounce resource base to an overseas group that's subject to completion over the next couple of months. And that will underwrite the repayment of the remaining convertible note and allow us to then accelerate exploration on that JV through the farm-in arrangement, which I'll talk about, and then also the Newmont exploration that's occurring. And our focus will shift to the very prospective Yandan package of ground that we've got. So I won't talk too much about the Twin Hills deal, but we announced that about a month and a half ago, as I say, what the key thing about that deal is we get a project that has 1 million ounce resource base. We get a funding package that allows us to pay back the convertible note. We get a 30% free carried interest to decision to mine, which in this market's pretty valuable. And it allows us to very aggressively start exploring at that asset again, which we haven't drilled since 2022. And I'll talk about the exciting targets there that we want to drill to grow the resource base. So what are we looking for? What we're looking for is obviously epithermal, low sulphidisation epithermal systems. There are some intrusive related gold systems in our tenement package, which I'll briefly touch on. But we're looking for epithermal systems similar to the Bajingo system, which was found in the 80s and over 30 odd years has found 5+ million ounces and continues to find high grade pods. What you see here is a 6 kilometre section of Bajingo. You can see there's lots of lower grade zones, and then you get these high grade pods where you might have 500,000 ounces or 1 million ounces at significant grades, 15 to 30 grams a tonne. So that's what we're looking for, and that's certainly what we're seeing in some of the deposits that we've already got resources on. So I'll start stepping through the projects. I'll start with the Yandan project, which is obviously going to be our focus with the partial sale of the Twin Hills asset. We acquired this off Aeris in 2021. We did a drilling program, and it was the first time the drilling program really understood what this basement fault was. We drilled a number of holes through the fault, and what was previously thought to be basement rock and maybe a mineralising fluid system that was feeding up through that fault. We really established that it was basically a truncated system, and our geological model is that the system was originally a high-grade epithermal feeder vein feeding a hydrothermal breccia above. At some stage there was a post-mineral deformation and then fault that looks like a reverse fault, and there's clearly an offset. Because some of the holes we drilled through this fault, some of these holes, we basically hit this stratigraphy, the conglomerate, and the sediment package that looks very similar to the other side of the system. So that gave us a lot of confidence that that there isn't obviously the rest of this system. Now, how big it is, whether it's a lot or a little, but typically those high-grade feeder zones are what you're seeing in the Bajingo system, and Favona in the US, Favona in Wahi and some others in the US, can be 15 to 30 grams a tonne and 500,000 ounce to several million ounces. So we're really excited about getting stuck into this once the Twin Hills transaction's finished. Just a bit of recapping on the resource growth. So the drilling programs we did in 2021 and 2022, and then the resource work we did in 2023 was really about increasing the resources and increasing the confidence of the resource, understanding the geology, starting to advance the projects towards start of a scoping study. Why haven't we started a scoping study? Partly because we originally thought we'd use Yandan as a centralised processing facility for these 3 project areas, but the more we got involved in Twin Hills, we realised it was probably going to be a standalone operation in its own right. So we didn't really want to start a scoping study looking at the infrastructure at Yandan and then sort of have to pivot. These systems have a lot of high-grade mineralisation as well, so if you raise the cut-off grade to sort of a gram, you end up with over 1 million ounces at 2.4 grams. So there is lower grade material that's been brought into the resource, JORC resources, and that's just a function of the gold price and the cut-off grade used. So 0.4 for the open pit and 2 grams for the underground. So further just understanding of the Yandan deposit. The resource we have, the East Hill resource, the 500,000 ounces, sits under this. This was only a small part of this was mined. This was previously mined by Ross Mining, about 350,000 ounces. But this fault basically moves to the north, and we believe the truncated bit of this is sitting somewhere out here, and that old chargeability data, which is ancient from Western mining days, sort of 84, 85, sort of indicates that there's some chargeability. It's a bit weaker to the north, but it's obviously a lot deeper to the north. So that's where we'll be doing some geophysics and trying to understand how far this fault might have offset and the shape of the fault, and then start looking at obviously drilling those targets. About 15 k's to the south of Yandan, we've got another deposit with a small resource. Again, it's the top of an epithermal system. Looks interesting, but we've got to chase the larger system on the ground, plus obviously look deeper, so that we're working through what the next steps are there in terms of that asset. And then so Yandan's here, Ilamartha, which I just mentioned, is here, and then to the west we've got 3 of these intrusive style targets, Maglows with soil geochemistry, gold soil geochemistry sitting above them. These look very similar to Mount Lation, Mount Wright. They're not our primary focus, and we may bring some other parties in at some stage. But these, again, big pipes. We're talking about 1.5 to 2 kilometre diameter pipes with interesting gold soil geochemistry sitting above the Maglows and those pipes. So cracking targets like Mount Lation was 2 or 3 million ounces. Mount Wright was 1 million ounces. So interesting targets there. Again, needs the next phase of work. So Twin Hills, Tony mentioned some grades early days at Ramelius. Well, we've got some of those same grades in this Twin Hills package. 146 metres at 5 grams, 190 metres at 2, 28 metres at 45. Some cracking grades in this systems at 309 and Lone Sister, and a lot of down dip and along strike potential on these deposits. So at the moment we've got 500,000 ounces sitting here at the 309 deposit and 500,000 ounces at Lone Sister, about 6 kilometres along strike. You can see the structures we've sort of outlined where the interesting soil geochemistry is and the interesting structural features in the basin are. And they're the target areas we'll be moving forward with our joint venture partner. So just looking at the first one, 309, so we did some pit optimisation work just to really understand where the pits might want to push. Obviously the gold price, we used about 2,500 Aussie for this work, so it's sort of moved on a little bit since then. So the pits will probably want to push a bit deeper, but just to give us some indication of where the pit shells are at surface and where we might want to drill in to infill some gaps in the resource model. We drilled a hole in 2022, 50 metres at 5 grams. Market sold us down, continued to sell us down. Obviously the sentiment's bad and people didn't care. So next step is really to follow this high grade feeder structure further down plunge, and it's open to the west in this section and to the south and the east. Just a bit of orientation, so that's the 309 deposit with 500,000 ounces. This is a resistivity plan view and section. There's 2 other resistivity targets to the southeast, a few kilometres, sort of a kilometre and a kilometre along to the southeast. We're pretty excited about 309 South because it's got some good soil geochemistry at surface. This one maybe we're a little bit less excited about, but just in terms of scale, these things look like they could all be 500,000 ounce deposits in their own right. So we'll certainly get stuck into both of these very quickly after the JV is finalised. The next one's Lone Sister, which is about 6 kilometres to the south. This is the resource, a couple 100 metre window here. This is a rhyolite sort of flow dome, and we can see here it wraps around to the northwest, so we want to drill down plunge here, which is to the north. Again, 37 metres at 36 grams, 20 metres at 4 at the base here. Good high grade intercepts that need to be chased up. And then in the background, we're divesting the other non-core assets, the assets we see as non-core. So the 3 project areas, we've got a large tenement package around Mount Morgan, which we own 100% of. We've got a joint venture with Nippon Mining Australia, which is JX Metals Corp. We'll move those tenements on later this year. And then we've got an agreement to sell the White Dam gold project in South Australia. So they're work in progress. What are the short-term catalysts? We've got obviously completing the asset transaction at White Dam and Twin Hills and future asset divestments. We've got drilling assays to come for the Newmont drilling that was completed last couple of months at Mount Coolin, and we've got a drilling program that we completed in Cloncurry that will release results over the next 2 or 3 weeks. And then sort of lastly, that joint venture partners, we've been leveraging our joint venture partners funding obviously to expand our exploration activities in the basin through Newmont and then through the Japanese joint venture in Cloncurry. Thank you.